Welcome to a new weekly series on trends in capital, and specifically trends in inclusive capital, with your co-hosts Nick and Doug. Doug, so another thing, for setup, why are we talking about trends in inclusive capital?
All right. So the first thing to think about when we talk about inclusive capital investment to the macroeconomic environment, how are we contributing to GDP? Are we able to grow that by finding underutilized assets, underutilized and undervalued founders and startup opportunities that can produce a higher alpha than we can get otherwise? The second thing to look at is, are we growing tech opportunities that are really unique? The value of investing in diverse founders is that you get an opportunity to really the thing about investing in inclusive founders is that you really get an opportunity to get a different view of problems and solutions.
I think we've got an article that I hadn't seen that was published in the Harvard Business Review. What's the date on this? June 19th. So middle of the year last year. It's called A VC's Guide to Investing into Black Founders. The highlight, the first sentence, Black founders receive roughly 1% of VC funding. So I guess if I was asked the question, why are we talking about this? It's because anything more, putting it more in the front and center, more in the mind and conscious of the investing and entrepreneurial communities is helpful, and it's also needed, right? 1% is a shockingly low and terrible number. But this article gives us a little bit of a breakdown. I'll read the few things that jumped out. One of the reasons is that venture capital investors who are largely white aren't good at recognizing and developing Black entrepreneurs. 4 areas of misunderstanding are different solutions to different problems, different surroundings and resources, styles of communication and cultural expectations, and 4, unconscious bias. As a result, the summary is, as a result of these missteps, investors are missing out on significant opportunities. Okay, of those 4 areas of misunderstanding, which I guess is a nice and soft way to say it, and hopefully it is just misunderstanding, because that would be easier to resolve. Which one of those stood out to you the most?
Initially, the one that stood out to me the most was the communication component, right? And in particular, it underscores how, and reminds me of a time where I went to, I introduced a young Black female founder to a white male investor that I knew that invested in her space. And we went to have the intro meeting, and she was giving a pitch, and the investor during the pitch took the opportunity to correct all of the terms of the art that we normally use in the tech world. We have a lot of buzzwords. We have a lot of elements that we typically use and say. And the investor thought it was appropriate to correct her use of some of the terms, which I thought was entirely inappropriate. So I think that's a opportunity that reminds me of the communication style, in that the buzzwords weren't really what was important. She had a solid business model. She was actually making money, and was prepared to take on investment to grow and scale. And that's really what the meeting was about. It wasn't about the semantics of the tech industry. So I think the communication component is really important. And we need to address that element first and create some continuity in terms of communication styles in order for investment to work.
That's right. Yeah, the article goes on to say, that it's great, but the irony is that in the midst of a pandemic, there's been this huge energized energizing force around supporting more entrepreneurs that are Black, brown, women, but especially in the people of color space, due to the very bright spotlight on the systemic racial injustice in the world. If you just glance and as we skim through this, does it feel like this is a good resource? I'm seeing a lot of tips. This is written from an African American entrepreneur. How should the VC community receive an article like this, in terms of, especially when they've got maybe best intentions, and are having a hard time putting rubber meets the road, putting their money where their mouth is?
Yeah, I think this is great food for thought. This really does sort of touch on some of the initial, maybe for lack of a better term, topical issues. Somewhat on the top layers that that may create the opportunity for people to do some more some deeper introspection about their own practices, which I find to be just as important as the institutional barriers to capital, is just the internal practices, the euphemisms that investors often use to justify investing in guys that look like them. The things like, we only invest in the best people. We only invest in the serial founders, or you often hear the term, I'm not sure that this team has the right, the right business model, but I'm sure they'll figure it out. Right? Those are the things that that people use to justify their positions. And I think this piece by Harvard Business Review really gives us the opportunity to start to question some of our internal motives that help us dig down to some of the processes and practices that we have that that result in this disparate investment.
Yeah, I actually, one of the key challenges is different problems, different solutions. And a young woman that I know, Sheena Allen, was quoted in here, and I just caught that. And I met her. She's I think from Texas, but I met her in New Orleans, and then she pitched at an event in Durham, and we've kept in touch and been LinkedIn friends. So I need to shout her out. But her quote was, I had a VC ask if I made up the word unbanked.
Yeah, Mississippi, actually.
Yeah. Okay. Yeah. So so obviously she saw a huge problem, which was an opportunity to use entrepreneurship for good. And the problem wasn't even understood by one of the potential VCs. So that's a pretty, resounding issue. So I think in the article goes on to say at the bottom, and we can go into each one, but there are good reasons to switch gears to the reason why you should invest Black. Starting with number one, statistically higher opportunity for returns. And you've done some work and some research into that too. So did this resonate as, accurate, on point, updated? What did you think about sort of their position on statistically higher opportunity for returns?
Yeah, absolutely. So I think the potential for statistically higher returns is the paramount reason for doing this, right? It's akin to Warren Buffett's value investing philosophy, right? You find companies that are and opportunities that are well positioned, well managed, and to a large degree valued either fairly or undervalued, so that you can invest in the upside. And so I really do see the opportunity here to be mainly to create and harvest alpha from undervalued opportunities, by capitalizing them well and capitalizing them appropriately, and not expecting grand outcomes from shoestring investing and simply providing them just a little bit of capital. We need to make sure that companies are capitalized appropriately.
Yeah. The second thing that they mentioned was equality in America. If you believe it, hashtag hire or wire. Are you familiar with that hashtag? Have you been following that? Have you been using it?
I haven't. I know folks that do. So they're saying there that's the call to action. They're saying, and the longer hashtag is make the hire, send the wire.
Mm.
They're saying to the investment community, like, take action if you really believe that there is a missed opportunity um, to invest in founders of color and women. Then take action. Make an investment or make a hire onto your team. Um, it's proven that 82% of VCs nationwide are white males, um, or somewhere in that arena. So there's an opportunity to grow and expand the managing partners of these firms, and that is one key way to make sure that you're reaching out to different communities to make investments.
Yep. And now, this is a quick read weekly on trends. We haven't really touched on a trend yet outside of, well, this is a trend, right? Awareness, identifying the problem, identifying the opportunity, and beginning to get, a growing body of communications around it, in the hopes that it opens the eyes of many to what's possible. And you don't need that many, right? I mean, like the Warren Buffett piece is a great example. He had Berkshire Hathaway, Geico. I mean, there's a lot. I mean, he's invested in, a ton of companies, but he looks at the concept of the elephant as well, right? So if you can find one that can really be, your rocket ship, right? So I think, the shockingly low numbers should seem to make the business case that there are absolutely a ton of great opportunities. So that's a trend. I mean, are you seeing any other kind of trends through articles like this? Either, educating the market wise or other?
Yeah, I think the point that they made early on in the article about we see different problems, and develop different solutions is really important, because if you look at the demographic shifts in the country, where Black and Latino population is growing, and will eclipse, percentage-wise, will eclipse the white population in the U.S. in like 2040 or something of that nature. If you look at that, then you start to understand that the economics of things like insurance, all of these mundane daily areas of life that are absolutely required, like car insurance or homeowners insurance, will need to change in some material way. So really looking at the demographic shifts can help us to anticipate some of the economic shifts that happen in the future. And of course, the economic shifts that happen in the future create a window of opportunity for some investments in those shifts.
Yep. So great. So I'm glad this is one of many really high quality anchoring pieces of content that we'll continue to share out as we see, and give a little narrative. So we'll post a link in the bio, so to speak. Switching gears, we're in the Triangle area of North Carolina. What I have some thoughts, but what do you see as sort of the lay of the land, trend wise, as it relates to capital and especially inclusive capital?
I do see the creation of a few more um, targeted funds, mostly in the angel space. So creation of funds like Resilient Ventures and others that have a stated mission of investing in women and people of color. You're starting to see more and more of that, especially across the Southeast, and that makes perfect sense, because the majority of the Black population in the U.S. is located across 9 states, from Maryland and DC across to Texas. So that makes sense, because the Black concentration of entrepreneurs is in the South and Southeast. So I like to see the increasing focus on this. I see more funds that are establishing commitments to Black investments, and some of those are taking the form of sidecar funds. Um, I feel that this is a baby step in the right direction, but the real goal is to have a significant part of your main fund invested in Black founders and women founders. So um, I I don't criticize that step. I think it's any any allocation is important to this goal. But I still think there's a long way to go before women and people of color wind up with significant portions or significant investments from the main funds.
Yep. Good insights. I think if I had to comment on that, kind of in the good, the bad, the ugly, or, the good being, we're seeing a lot of this, what I'm calling content and around awareness, right? So driving awareness to the opportunity, driving awareness to the challenges, helping, hopefully unblock those who want to take action, want to take advantage of the opportunity and do the right thing while, investing into great companies. That's great. The bad, to your point, I mean, in the triangle, I've seen some stuff, but it's not this massive inflow of money, and I haven't seen big deals happen. And so it's like, how do we get action? What's stopping somebody, from being kind of a first and being a leader? And that's the only thing that's really going to make it really, really go as not even a movement, but as a non-issue, right? Ideally, it's nothing. Right. It just is a part and parcel to everyone's investing strategy. And it's a known piece of the puzzle to the point that it's not even like called out anymore. And then the ugly is sort of, I guess maybe it's scary. It's just sort of like the fear of, is this kind of a partial movement that, because it's only baby steps, begins to subside over time? And then like we don't think about it as much. It's not in our kind of zeitgeist as it was. And there's competing like factors out there in people's mind. I mean, one of which is like the vaccine, right? So, okay, let's get back excited about this and maybe forget about problems that existed before. Back to business as usual is actually good in many ways, right? Because we've been dealing with the pandemic, but a lot of people want to get back to life as usual, business as usual, but not really, right? Not in this area. We want to make sure we keep this front and center. Do you share similar thoughts or feels or fears? Yeah,
absolutely. I think there's a difference between back to normal in terms of the flow of business and commerce, but there's a completely different completely different thing when you talk about breaking cycles of racial injustice and bias and prejudice, so that you unlock new potential in the economy. I mean, that's essentially what this is. I think there's a fear of reallocation of resources that is a bit unwarranted and illogical. What it really is an opportunity to unlock underserved areas of the economy in a way that grows the economy overall.
All right, cool. Well, this is this week's Trends in Inclusive Capital. Link to the article that we reviewed in the description notes, and we'll see you next week. Thanks, Doug.